Today I am going to discuss about accounting equations and its formation. Let's look at the main equation. Assets equals equity plus liabilities. So in order to explain the main equation, I will break down this equation into two parts. First one is assets equals equity, and the second part is asset equals equity plus liabilities. So these are main equations. So before that I will explain the first part, how to build up this equation, how to form this equation assets equal equity, how it is developed. So before I move on to this, let me move on to a concept called entity concept. What do you mean by entity concept? Entity concept means business and the owners are treated as two separate entities. So basically under entity concept we call it the business and the owners will be treated as separate entities. So therefore any transaction belongs to the owner will not be recorded under business books. Only the business related transactions are recorded in the business books, the books of the business. So let's look at in a different let's look at by taking an example. For example, let's say the owner has invested $100,000 in the business. When the owner invests money in the business, what is the impact? So there will be two impact on the business. So what are the two impacts? First one is business receives cash. First thing is business receives cash. At the same time, business has to pay back the cash to its owner. So business receives cash, at the same time it has to pay back the money to the owner. So two things happening here. The business owns cash and business owes cash to its owner. So when the business receives cash, it is known as an asset. Business owns an asset. At the same time, when the business has to pay back to its owner, it creates a liability. So see the dual impact. It affects on the one side the asset, on the other side liability. So therefore, if you look at this transaction from the point of view of the business, there will be dual impact. Now let's look at the equation. When business receives cash, $100,000, it receives cash, therefore the cash of the business will increase by 100,000. And also it creates a liability. It owes a liability towards the owner. The liability towards the owner is known as the equity. So therefore the equity balance also increases. Owner's equity by 100,000. So thereby at any given time, if you look at the balance sheet of a business, the asset will be equal to the equity. So this is how this formula or the formula is developed under this equation. Now let's look at the second part, assets equals equity plus liabilities. How do we develop this formula? For that, let's assume the business has obtained a bank loan from a bank. Let's say this is the business has obtained a bank loan from the bank. Let's say $50,000 bank loan. $50,000. So even here there will be dual impact from the business point of view. So what is the dual impact? When business receives money from the bank, the cash balance will increase, or the asset of the business, the cash balance will increase by 50,000. And also from business point of view, it owes a liability towards the bank. So therefore it creates a liability towards the bank, 50,000. So when you substitute this, the bank loan, the business has received a bank loan amounting to 50,000. The business cash balance will increase by 50,000, which is equal to the liability, the bank loan will also increase by 50,000. So therefore you can see your assets 50,000 and liability 50,000. So which is balancing. So at any given time your asset will be equal to equity plus liability. So in this scenario, the first transaction, owner has invested 100,000, the cash increased by 100,000 and owner's equity increased by 100,000. In the second scenario, the business has obtained a bank loan worth 50,000. So by 50,000 the cash balance increased and also the liability to the bank increased 50,000. If you summarize this, if you summarize the total impact will be, the total cash balance will be under assets 100,000 plus 50,000, cash balance will be 150,000, which is equal to, you have the equity balance 50,000, this is equity 50,000, sorry, $100,000 plus your liability, the bank loan 50,000. So your total assets value 150,000 is equal to equity 100,000 plus bank loan 50,000. So at any given time your balance sheet equation will balance. If you want to watch more videos on accounting equation, you can subscribe to my channel. Thank you for watching.